Hello everyone, now let's get started. Now I've only allotted about 20 minutes to give you the big idea and a little time for review before we conclude our initial business relationship building session. So let's go ahead and jump right into it. My name is Nick Mills and I represent the Mills Funding Group LLC, a real estate acquisition and asset management company that's been in syndication for 10 years. Now within that time, we as a company have accomplished several successful feats since that time. We've successfully raised over $500,000 over the past 5 years from outside investors like yourself. We've worked under and worked with successful and nationally reputable coaching programs and investment networks led by Dave Lindahl, Robert Kiyosaki, billionaire Bill Bartman, and expert investor consultant pitchman Oren Klaff. And I personally has funded over $100,000 to my real estate investment business. Now, the questions asked, why now? Why this presentation? Why do we even care? Memphis is a second tier investment market that currently has an oversupply of off-market deals in the single family and multifamily arenas. Now, as compared to national averages, Memphis homes are about $40,000 less, which leaves a huge room for profit off of cash-only deals and a huge opportunity for a portfolio build in the #1 U.S. investment rental market. Now, since foreclosures are still rising in this region, there's a chain reaction, which essentially is a stronger need for apartment and home rentals. There's also been a unique change to out-of-town owners who are also elderly and immensely motivated to sell their real estate at attractive investor discounts to consolidate and move new money closer to home, which opens the need for new money to come in and become the new players of local wealth. Now, compared to some of the top apartments in emerging markets that's leading the wealth transfer right now, these motivated owners have improved amenities to create tenant retention, which leads to higher consistent occupancies and minimize deferred maintenance, which inspires even the most novice of an investor to jump in on a wealth transfer rush of Memphis and other attractive emerging markets. Now, here's an interesting fact that Memphis, Tennessee, according to Forbes, is the #3 U.S. rental market, and according to the Wall Street Journal, is the #1 U.S. single-family home investment market. Now, foreclosures are still at an all-time high, and rents are still below their 5-year market rates and ahead of inflation rates. So with that fact right there, an opportunity arises where helping major emerging U.S. cities maintaining inflation, jobs, and overall quality of life also creates for you a wealth boost builder through diversified and short and long-term real estate investments that are sure to be maintained with the city's economic cycle. Now, from that major chain reaction, everyone wants to sell, which essentially sets up wealth transfer in that market. But with that, also simultaneously, banks locally and nationally can't and they aren't lending due to government regulation fear and an oversupply of REOs and non-performing notes, which incidentally kills their treasury budget for the upcoming year. Plus, you have experienced and or tired owners and investors that just wants to improve their money or get out completely. So with the economic relevance from that is foreclosures are still locally and nationally high, which opens the floodgates for hungry renters. There's nothing new on Wall Street. There's too much fear still, and there's not enough knowledge for good consistent returns. Financial brokers and money managers are still leaning on the lack of time concept that is pressing everyday professionals and 401k holders to do it themselves and essentially get burnt out and put their money into the financial brokers and money managers' hands and just say, do what you can and we'll suffer the consequences later. So fixing this broken cycle of economic slavery will consist of finding tangible, flexible, progressive investments in real estate whose value is not based on speculation or fear, but performance. We then find a motivated seller's market and then you commit in that market funds for incomparable returns, excitement, little competition with huge reward potential. Now, benefits from these possibilities include long-term return potential based on economic performance, not fear tactics, since there's always an emerging market to invest in. Simply put, you can watch your money grow and set you free. Now, this is all about how to achieve the best path to passive income through diversified emerging market real estate investments. Now, for investors with saved, fearful money in stocks, bonds, CDs, mutual funds, and annuities who are dissatisfied with mediocre penny pension returns that they can't live off of post-retirement, along with high-risk losses, my company's idea, is a project, a bank robbing fund, if you will, that provides the highest returns in the country with the lowest managed risk. Now, unlike REITs and banks, we only profit after you do, and you can cash out whenever you want. But with the returns that we offer, why would you? Now, before we move any further, let's take a moment and let me give you Mills Funding Group LLC mission statement. It is to acquire properties to create opportunities of highly competitive rates of return for private investors. We also create a business environment where we receive mutual profitability by giving back more. Now let's move on to what the problem is. The big problem is that there is an oversupply of off-market single-family homes, but renters and future owners can't get access to these properties. When they find a property of choice, financing has become about as impossible as Republicans voting and supporting Obamacare. Now, it doesn't help that renting in apartments are not as attractive, not because of the year or the market trends or anything else, but it's due to mismanaged properties with high growth potential and no effective, consistent marketing plans. Now, vacancies don't occur and stay constant only due to bad properties or areas, but in addition to that is rather to the spreading disconnect between rental prospects and the rental properties that are available. Now, with home sales dropping and foreclosures rising, the number of renters growing, this leaves a huge opportunity for cash buyers and passive investors to grow their portfolio for long-term growth. So how do we take advantage and help with this crisis? The other guy's solution would try to qualify and reason with the banks for financing, which shorthands inevitably and ultimately decapitates their path to investor success. Or they get smart and they go to the hard money man. They incur massive debt based on speculation of selling a property quickly, and then they lose any profits and momentum before they even get started. Now, our solution is to simply reverse all of that and stop the speculation and the vacancy, increase the returns and occupancy. The Mills Funding Group will rob the banks to give you long-term growth. We do this by taking advantage of the bank's Achilles heel, their shadow inventory, and taking advantage of the realtors' Achilles heel, which are local and public MLS listings that's been on the market for over 90 days. Now, we find the best value in the properties that most investors can't afford, accept, or don't even know exist. Finding deals like these allow us to properly take our time, do the due diligence without any obstacles involving major competition to get in the way, or force the process of a bad investment due to any time constraints or anything else affecting that affects the return potential. We first find several deals to create as a portfolio package that meets our investment metrics. We use such factors such as ROI and the cap rate to determine the potential for long-term growth. Now, we also perform research through several research sites of award status that determines the history, the present flow, and the future movement of neighborhood market value and rent value to build exit strategy strength. We also consult with several local brokers and realtors on our research findings and offer unbiased room for additional expertise from them to strengthen our case for choosing the properties in the deal. We then get the real numbers with the properties to ensure that they can hold a consistent ROI trifecta of 8% cap rate, 1.6 times debt to coverage ratio, and 12% cash on cash return for a minimum 3-year period. Now, on to the secret sauce and the magic and the unique advantage as to what sets us aside and above everyone else. We first find a property or portfolio deal. We then raise the funds and secure them in an eyes-only escrow account. We provide you with a mortgage or a promissory note if you're a debt partner, and property insurance at closing. We receive monthly cash flow from the property and we manage that. You receive a quarterly check from the property's cash flow, and we sell or refinance the property after a period of time, which is usually 3 to 5 years, and we return your funds plus profits. Now, the secret sauce, even thicker here, is what gives our company purpose over the competition and gets you excited even more all over. We offer monthly cash flow opportunities with appropriate funds raised or a certain number of successful deals done with us. So what that means is that you're eligible for monthly cash flow opportunities after you complete at least a minimum 3 completed deals with us. That's where we invest. That's where you invest with us. We hold your money. We pay you quarterly. And then when the time is right, we cash you out. Or you can invest a total of $300 to $5,000 total within your first year of investing with us, or if you've committed $500,000 in one deal. Now, your return on investment will be lower, but your payments will become more frequent. We also offer quarterly cash flow opportunities to credit partners and track record sponsor partners with no committed funds attached. The return on investment will still be at a great rate, and eligibility occurs only after the committed funds have been raised. Now, you can also diversify your committed funds in several emerging markets, which are only limited to apartment deals only, because as we said, we minimize risk with volume. You can combine your funds with other diversified partners, and then a shadow certainty that we can set for you and your returns are secured in 3 ways: equity from the raise, profits from the cash flow and the cash out, and property insurance that's done at closing. Now, you also get the opportunity throughout to increase your return on investment when your referrals from your network, online and offline, commit a minimum amount towards a deal. Okay, now for you analysts out there, let's go ahead and let's talk about how our CDs compare. Okay, for instance, if you invest in an initial $75,000, a modest $75,000, if you put that in a CD at 4.17%, which is still for the past couple of years has been like the national average rate across the board, it looks like this. You get paid $3,187.97 a year compounded, and at a 5-year CD at that rate, you get $21,613.97. Not bad, but we can do better. If you invest $75,000 in real estate and we were able to find a deal that grants you 9%, it looks like this. You'll get $1,687.50 per quarter, or you get $6,700.50 per year at a simple interest, which in 5 years it'll equate to $33,750 paid directly to you. and that's a difference of $12,136.03 over 5 years. But we're not done. Let's go up to $100,000. Let's up the ante a bit. Now, $100,000 in a 4.17% compounded CD, you would get $4,250.63 a year. At a 5-year rate, you end up with a little over $23,138. Now, you put that same $100,000 into a 9% ROI real estate deal, you'll get $2,250 per quarter or $9,000 per year, which in 5 years at simple interest equates to $45,000 paid directly to you, and that's a difference of $21,861.62 over the 5 years. Now we're going up to the big money. Now, if you invest $500,000 in a 4.17% CD, in case you didn't know where else to invest it and you didn't trust any other markets, and you just placed it in a safe CD, it pays you $20,850 a year compounded, and at a 5-year rate, you could end up with $113,314.63. Now, with $500,000 put into a 9% ROI real estate deal, you'll get $11,250 per quarter or $45,000 per year, which at the end of 5 years equals $180,000 paid directly to you, which is a difference of $66,685.37 over 5 years. And for the big kahunas out there, the whales as we call them, $1 million example, if you guys put it into a 4.17% CD, you'll end up with $41,700 a year, which is the the equivalent of most people's salaries, or at a 5-year rate, $226,629.26. Okay, it's not bad, but at 9% we can do much better in real estate. You get $22,500 per quarter or $90,000 per year, which at the end of 5 years is $360,000 paid directly to you. That is a difference of $133,370.74 over the past 5 years. Now, for our initial raised budget, we're jumping out the gates. We're just going right on out. We're setting up a minimum $1 million raise for all of our projects and a projected raise up to $50 million in our first few phases for this system. Now, for all deals, we seek a minimum 8% cap rate to ensure that the project can produce positive cash flow each month, a 1.6 times debt to coverage ratio to leave the option open for a cash out refinance or mortgage out a more lucrative can't miss deal, and a 12% cash on cash return to ensure that there's enough cash flow to pay all the partners in the deal. Now, we schedule the cash outs back to our investors within 3 to 5 years of holding the property. Once the profits are returned, we offer new investment opportunities to keep the relationship and the wealth growing process strong. For the optimal deal setup, we prefer to use no more than 3 investors on one deal, contingent that the fundraise commitments are raised high enough to get in the deal and leverage out and take over the deal. Now, that's why we always aim primarily for discount cash deals, because we own the leverage and the potentials for higher returns increase. Finance deals also allow us to purchase more in a short time if the cash flow permits it after the debt coverage ratio is put into the equation, but it works best with a few committed partners with huge fund commitments to allow for a prompt return on their money. Now, this scenario simply presents quite a fun catch-22. You can either lower your risk, your investment risk, with more units across the board that's in volume, or you can maximize your returns while you can. So either way is a win-win, but it's a matter of asking which win do you want at that moment, which win do you feel more emotionally attached to at that moment. Now, here's the deal offerings of what you'll receive. For ground floor investors, you'll receive the first hand at all deals, the highest ROI offers with the fund commitment requirements met. Royalty checks will be given for every referral commitment after their completed first deal. Now, for all investors after the ground floor phase is completed, they'll receive a second tier ROI offering for their first 3 completed deals with us. So for your first 3 deals, you will have a set ROI regardless of what you invest with us, so that we can hedge inflation and keep the leverage up to maximize the potential that a deal has while doing what we say we're going to do with your investment. Now afterwards, after a total commitment amount threshold has been reached, a sub premium ROI offers then apply to every deal thereafter. So what that means is that after you commit yourself to 3 deals with us, which you can diversify in your first go round, that's 3 deals, you'll then qualify for a higher ROI, but it won't be as high still as the ground floor investors, because time is of the essence. We reward those that take better, quicker action. Now, when you receive your payments, you receive quarterly cash flow checks for all investor levels, which is cashed out after a minimum 3-year period. Now, to qualify for monthly cash flow checks, you must meet the following criteria. For individuals out there, you have a $100,000 initial commitment, a $1 million overall commitment total during your fund commitments. As we said, you can invest in several different markets under several different deals in a total of $1 million, so that, and also you cannot cash out early for any reason. Now, for investment groups, for the hedge funds, the capital groups, the banks, the lenders, the angel groups, and things of that nature, $1 million initial commitment is required, or a total $10 million during your total fund commitments if you don't commit $1 million initially. And as well, there are no early cash outs. Okay, now as I just said, to expedite overall commitments, you'll be allowed to diversify in several deals so that your money can be worked in several different ways. You won't have all your eggs in one basket, even though those are some pretty big surefire baskets that we provide you with. Now, how it'll be received is that all your payments, quarterly and monthly, will be received via wire transfer or good old FedEx special delivery. Now, your role and responsibilities are simply to passively invest with us, to receive passive checks, to invest frequently, to expand your ROI and your network deal opportunities to your referrals. So also you bring your referrals with you as you become the initial test case that this system works. Opportunities to offer from your personal business, to offer products or services that are beneficial to any of our investments. You can provide them at a discount rate, of course, in exchange for an ROI increase on your quarterly cash checks and your cash outs at the end of the holding periods. Okay, now here is why you should invest with the Mills Funding Group. Okay, first, again, to show off our expert strategy points for getting on our yacht of investment awesomeness, let's review a few points that'll make you tingle a bit more, because the longer the tingle, the better the sensation and the better the result at the end, if you know what I mean. We have the system that can get you discount prices on deals and steer away from retail and market value, increasing your equity in the process. We offer the highest returns to those that commit and fund deals the fastest. We offer investments in locales where investors can lay their hats. They can vacation there. They can live there if they want to, while they watch their tangible investments perform and grow. With larger fund commitments, the opportunity for higher ROI than what was calculated can be achieved. So in other words, you commit, we commit. Now you can get paid more frequently than any other competitor can, or in this case is willing to offer. Bring your network to invest with us. You get royalty checks for each deal that they participate in. Okay, so you get paid based off of your network that you bring to us. Like I said, you commit, we commit. Plus, your ROI can increase from their commitments, as we said earlier. So during any financial cycle, there's always an emerging market where long-term growth can occur with recurring investors, and we offer the opportunity to you to say that we would never stop researching, we would never stop looking for deals, we would never stop putting together deals, we would never stop building relationships across the nation in the best markets that generates the highest returns. Okay? So, with that being said, this is the end of our presentation, and I have a last few words before we leave everything in your hands. You have the ground floor opportunity to get in on an exclusive market like Memphis and other top first tier emerging markets. Now, of course, we're the best company to work with, since we'll give your investment commitment the closest attention that it needs and deserves. There's no better competitor with our expertise and well laid out system. But of course, with all that said, I'm biased. Of course, the value of the offer is there, but I can't, in the final analysis, tell you, the viewer, the prospect, what to do. So again, I tell you to invest. I can't tell you to invest, but I can tell you that I believe in the results that we've received at this point for the past 10 years. Our due diligence has been thoroughly done. I've disclosed everything necessary for you to know at this point, and I'm personally in love with this opportunity and its potential for future growth and economic growth and stability back into our marketplace. But again, I cannot tell you what to do. You need to decide that for yourself. So we only have room for 10 investors at one time, and out of those 10, we only allow anywhere from 4 to 5 ground floor investors to take advantage of the first tier projects and opportunity and the cash flow opportunities that we provide everyone. So with this, go ahead and fill out the investor's questionnaire at the bottom of this presentation to ensure that you qualify to be involved further. Again, thanks for your attention to this short pitch presentation, and be sure to share this among your network, online and offline.